Warren Buffett. Should you trade like Warren Buffett? I've been asked to make this video now about the sentiment around Warren Buffett, and people follow him for his trades. This is going to be quite a personal video. I'm going to share with you my insights for investing and what recently has happened with Warren Buffett and whether you agree with me, and going to cover that on this video. A lot of people use Warren Buffett as an oracle, the Oracle of Omaha, as a guide to what they should invest in. They follow him blindly, and if Warren Buffett is buying something or Warren Buffett is selling something, then so should you. So in this video, I'm going to explain the difference between me, you, and Warren Buffett, and should you follow what Warren Buffett's doing. And let's get straight into it. If it's your very first time here, do click subscribe and ring the bell and give me a thumbs up. Really helps. Now, I'm in green right now. I want to share that with you. As you can see, I'm up on the week. I'm also up on the month and the 3 months. Consistently up. Overall, I am up more than the market and more than Warren Buffett. Consistently. Not every day. We've got a red day today. But on this week, on this month, on this 3 months, I'm up more than Warren Buffett and more than the market. The reason for this video, though, is to answer a number of questions that have come from my viewers who watch what Warren Buffett does. They look at Warren Buffett videos and they say, you know, he's the Oracle of Omaha. He's the greatest investor of all time. And yes, he is. However, Warren Buffett has and admitted to making many mistakes. And when he started off, just like all of us, he probably bought penny stock. Well, he did, just like I did, in fact. Still do to a certain degree. Buy penny stocks, made some money, and now he buys value stocks with great value. Very different strategy. And strategies change over time. Principles, information, knowledge change over time. So where you are today as an investor is not where you'll be next year, 5 years, and 10 years. So the worst thing that you want to be doing is doing what someone is doing who's been doing it all their lifetime, thinking, well, I'm following the best. However, they had to get there. And you can't just pick up where they're leaving off. You have to learn yourself. That's how you get there, not just start from that point, because you have to build up a portfolio first of all. So your strategy will be completely different. Now then, what I'm going to show you is over the last few weeks, it was reported that Warren Buffett sold his J&J. He got out of J&J, as did Jim Cramer from his charitable trust on Mad Money. Famously said that I'm dumping all of my J&J. It's rubbish. It's being driven down by litigation and all the rest of it. Well, I will tell you now, ever since Jim Cramer sold J&J, it's been going up. Ever since Warren Buffett sold J&J, it's been going up, by the way. Now, you might say, when they sold it, or particularly Warren Buffett, would that not drive the market down? Because the size of their allocation is way more than you or I. Well, it didn't. It was already down. It didn't have hardly any effect on it whatsoever. J&J is solid. It's the best pharmaceutical company in the world, bar none. What's holding it now under a cloud is the litigation, which we are seeing start to become resolved. Could have been resolved years ago. However, J&J want to do what's best for the business. They want to find the best way to settle it. You can talk about the moral issue. We're not here to talk about the moral issue or whatever. We're just here talking about the investing side of it. They can settle this. They've got the cash. It's under a cloud right now, and the stock is going pretty much sideways for a while. But I am actually doing much better on it now. I've been buying the dip all the way down, and I am happy to hold it. Jim Cramer is all about making sensationalistic TV. He makes money from you watching his TV show. I don't care whether you watch my video or not. What I am building is a family of who watch me live every day up to 10 hours a day. I'm building the most honest, real, live channel on YouTube TV. That's what I'm about, right? I'm not trying to sell videos. I'm about building my audience. That's why I go live all the time. Otherwise, I just make a few videos a day and I'll be done with it. J&J, in my opinion, is oversold. And just because Warren Buffett sold it doesn't mean, maybe I should sell J&J. First of all, you need to understand that Warren Buffett bought J&J a long time ago for a fraction of the price of where it is today. That's the first thing. The second thing is, so his nature and his behavior of the stock is going to be very different to yours. His portfolio is very different. He represents a lot of investors that have invested in Berkshire Hathaway and are relying on him for a successful outcome. He is not looking for high growth stock necessarily like he used to. He's got plenty of cash on the side waiting for a dip. Now, he's out of J&J, but he's still holding Apple and still holding Coca-Cola. I'm just going to say he did trim off some Coca-Cola, by the way. And if I share with you my Coca-Cola, that's been going up ever since as well. So I have not been selling any Coca-Cola. I've been adding. I've not been selling any J&J. I've been adding. Now, Warren Buffett has assembled a huge amount of cash on standby for the recession, for the dip. Nobody knows if there's going to be a recession, and it doesn't matter to Warren Buffett if there is or there isn't, because the cash he holds can earn a good return. He doesn't have to reinvest it. He can have his money in his stocks and just hold it, and he can just hold his cash. He doesn't have to do anything. In a very, very different situation to you and I. What we're trying to do is grow a portfolio so we then can move it into dividend stocks and do what he's doing, hold it in cash, earning money without any risk. We are in a very, very different situation. But I don't believe for a second that we have a recession coming. But there's one big point we need to measure here, and that is the market, the stock market, is very, very different than the economy. The economy is 6 months to a year behind the market. It's very, very different. So we've had over the last few weeks, my portfolio green consistently. I'm beating the market. I'm beating Warren Buffett consistently, right? Up and up and up. Really, really great. Doing good. Because the market is buying ahead of the game, because they know where we're going to be in 6 months to a year's time. What we're now seeing Apple, which Warren Buffett loves, by the way. I think it's 50% of his portfolio is now Apple. Apple is about, and it's already happening, that they are reducing the price of their phones. They are starting to have buying pressure from their customers, because now, after all the pain that the Fed have put on the consumer, it's a lagging effect. It takes 6 months to a year to have an effect. So even when we see rates get cut next year, going into the spring, the summer, we're still going to see people suffering because, inflation is still going to be high. It's peaked, yes, but things are still going up. They're just not going up in the pace they were going up. We're going to see people still feeling the pain, paying for their new iPhones, buying their new cars, buying their solar panels, and all this other stuff, which we are investing in for another year yet. Even though inflation is slowing, and even though interest rates are coming down, and all the rest of it, we are going to see people have pain with purchasing. Credit card debt is out of control. 90% of Americans are paycheck to paycheck. All of that stuff is still going to be there. So the market is betting on things improving because they're 6 months to 12 months ahead. That's why everything is surging. Well, not everything, but a lot of the things that I am in are going up. I'm not in Apple right now. I don't think it's right to be in Apple right now. I think Warren Buffett is wrong because Apple's had a great rally, but remember, Warren Buffett bought Apple penny to the dollar. I don't know what he paid for it, probably $1 a share. You can't buy it for that price. So just because Warren Buffett owns Apple doesn't mean you should buy Apple today. It's too expensive. But in my opinion, what you should be buying now is defensive stocks which can live through the recession if there is a recession. So unlike Warren Buffett, who is dumping all his J&J, I have been buying it. And if you think that Warren Buffett has influence to drive the stock down, you are wrong, because since he sold it, it's actually been going up. So I've not seen any dramatic 10, 20, 30% drop on J&J because Warren Buffett sold it. That didn't happen. And in fact, it's been going up recently anyway. So if you are looking at Warren Buffett as your Oracle of Omaha, and you are looking at Warren Buffett as someone to follow, you should never do that. You should never follow me. You should never follow anybody on YouTube or some celebrity or whatever. You should start off by doing the research in yourself, research in your education, and working on your own what's the word I'm looking for? Your own emotions. Get your emotions in check, because emotions is the biggest problem. It's very, very easy. It's not very hard to learn how to read a balance sheet. Anyone can read a balance sheet. I present you the balance sheet, the assets, the liabilities. Spend 5 minutes. You can read it. After a few hours, you'll understand what it means. You can read a balance sheet. It's not difficult. The hard part, though, is to checking your emotions, because if you don't understand what you bought, you don't understand the stock that you are in, you've borrowed money to invest, you've used margin, you're out of control. I use margin, but I understand it and I understand the risks involved. My portfolio is balanced and managed. If your emotions aren't in check, you'll always be chasing the stock. You'll be thinking, what does Warren Buffett do? How does he think about it? And you'll be constantly making mistakes. And you know, I know it's quite controversial for me to come on here, just some guy on YouTube, and say, that what does Warren Buffett know? Warren Buffett isn't me. Warren Buffett isn't you, and his reasoning to buy or sell a stock is very different to yours. His goals are very different. His strategy is very different. You can't just follow it. And the fact of the matter is, and even as I'm speaking today, we've seen J&J just after Warren Buffett dumped it all going up. And if I show you over the week, we're up 1.61. Over the month now, we are still down 1.83, but we are trending up now. Ever since Warren Buffett sold it, it's improving. There it is. So I just wanted to do this video because many people ask me, they ask me, what am I buying? They follow my trades, or they watch, and I see from my content that people watch Warren Buffett's videos. Warren Buffett is holding Apple, so I'm going to buy it. That is a very, 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 very different thing. If we look at Apple right now, 50% of Warren Buffett's portfolio on Berkshire is Apple. Does that mean you should buy it because he owns it? No. I don't know if he paid like $1 a share for it. Of course he owns it. Is he buying it today? I don't know. I don't think so. I'm certainly not buying Apple. Apple is too expensive because certain blue chip stocks like Apple, like Amazon, they're all overpriced. We've shown you the numbers on it. They're all overpriced. Coca-Cola wasn't and isn't still. I bought it. This keeps going up. I bought it at the bottom. I declared it was the bottom. I said J&J was the bottom. I bought it at the bottom. I keep adding. Well, I'm not adding anymore because it's big enough. It's way bigger than it needs to be for my portfolio. So the message I'm trying to get across in this video is, do your own research, be your own investor, and don't follow me or anyone or Warren Buffett. Warren Buffett started out by buying penny stocks and taking extreme risks. That he doesn't do that anymore. Now he buys quality value stocks, which is what I am doing alongside my high-risk stocks, because you do need some high-risk stocks to grow a portfolio big enough to be able to put in dividend secure stocks. But just because somebody owns something doesn't mean you should buy it. There's a right time and a wrong time. And if Apple keeps on running and keeps on going, and in a year from now, Apple's doubled its price, was I wrong to buy it? Was I wrong not to buy it? No, because my money is invested elsewhere. I want a portfolio that I can wake up day in, day out, week in, week out, year in, year out, and be up consistently overall and not be concerned if I go to sleep for 6 months and find a margin call and my portfolio's gone to zero. You need a balanced portfolio and you need to buy stocks at the right time. We all want to own Coca-Cola. We all want to own Apple. We all want to own Google. Great companies. However, as an investor, you're looking for one simple metric. If I buy it here, can I sell it here? If a can of Coke is worth $1, are you going to pay $10 for it? The only reason you'd pay $10 for a can of Coke if it was the only can of Coke left on planet Earth and everybody was chasing you and wanted to buy it. But if it's in abundance and you can buy a can of Coke everywhere, you're not going to want to pay more than $1 because that's all it's worth. And even though it's a great drink and I love Coca-Cola, I ain't paying $10 a can. So this was my thought on a reply to many of you who've asked me about Warren Buffett dumping J&J, Warren Buffett, holding Apple, Warren Buffett, and, should you follow him? No, I don't think so. So there's my thought. I hope that answers the questions that I was asked about Warren Buffett. Be your own person, do your own research, understand you are on your own journey, you have your own targets, and what one other person has done is not absolutely 100% not going to be right for you. Most important investment you'll ever make is on your own self, your emotions, and your education. Take the time to study the stock. More importantly, study you. If you want my links to my videos or my social media or my X or my newsletter, click above my head or in the description. And over here, I'll post more videos I think that will be useful to you in the series. Until next time, as always, take care of yourselves and each other.